Hello, this is Ahura from Altered Market. We'll be with you to see what happened last night in Federal Reserve meeting, what did they decide, and what was the market reaction. Let's check first the decisions made, and then we can see the market reactions as well. As a decision, well, most analysts and market participants they were thinking about 25 basis point, but what happened? The expectations that we saw in CME Group for estimated of about 60%. 50 basis point rate cut that happened, and Federal Reserve cut the rates by 50 basis point. Hope it was not political, and that the decision was based on economic indicators. As I do personally think about that economic indicator, they are not supporting the 50 basis point rate cut. We had many other data that they were talking about the 25 basis point rate cut could be enough for now. But what did the Federal Reserve decided? It was a shock for the market, and now we have to see and check how this shock can be affected other markets as well. So let's check what happened. Federal Reserve cut the rates by 50 basis points. And if we go and to have a short review on what's happened, I have a ready text here for you. You can go onto the website and check as well. What happened generally, the decisions, I mean, this is a summary of announcement, Federal Mr. Powell's press conference, and answers to the questions made in the federal in a press conference. So I will have a short review on topics, the main topics on what happened there. About the rate cut, 50 basis point rate cut. Labor market, they told the labor market is resilient, it's still good, and they have it has some sign of slowing down, but 4.2% unemployment rate is still fine enough. As inflation progressed, they were so happy that they could bring down inflation from 7% to 2.2% currently, based on the latest data that we had in August. On economic growth, GDP growth so far is 2.2% annually in the first half of the year, which is acceptable, which is a fine. On the balance on the risk in the market, they say that the risk in the market is balanced right now between Federal Reserve two main target, two main policy. I mean, kind of the goal, which is the holding which is the maximum unemployment level, and controlling the prices. So the risk between the inflation and the labor market is the same. As much as we have the risk for higher inflation, increasing inflation, we have the same risk for increasing unemployment rate as well. About the future plans, Federal Reserve several times emphasized that the future plans will be based on the future data. Housing market is fine. The prices, the rents are kind of stabilizing, but still high, and the inflation in the housing market is high. I have to mention that the Federal Reserve confirmed for the second quarter in a row. I mean, after first quarter increasing investment in the housing market, in the second quarter and the third quarter we had the lower the investment in the housing market, but still that's one of the reasons that Federal Reserve confirmed that the right now is the inflation in the housing market in housing market is still one of the concerns of the Federal Reserve. About the dynamic of on the labor market, as they told, they say that this despite the cooling the job gains, the labor market is still robust and still strong. As for the inflation control, Federal Reserve confirmed that they were so successful. Not so, they were successful in achievement to their goals. But for the economic growth, they were. Let's go here. So this is generally what they told. So and this is the data, and for the next meetings we are going to see what's happening, what's going to happen in the market, and we will decide based on the market happens. On the other hand, we had economic growth projections as well. So in the economic growth projections, if you go and see the dot plot, it is very interesting dot plots. I think that was the reason 50 basis point rate cut we can find in this dot plot, because the Federal Reserve somehow they're scared what can happen. So they decided to react earlier than later, as they made the same mistake as they made this mistake when the inflation was increasing. Do you remember? You remember when the inflation was increasing, many market participants and analysts they were warning Federal Reserve that the inflation is increasing and you have to increase the rates. Federal Reserve was waiting, and then finally in the one meeting they increased the rates by 75 basis points. So that happened here. So they scared of not to happening again the same scenario for the labor market, for the unemployment level, for economic growth, for another recession. So what they decided to make this big announcements earlier, and that's the mistake. I think not going that earlier, not going that late. So they have to go to between. They could cut the rate 25 basis for the last meeting and continue in this meeting and the next meeting. That could be much better than cutting the 50 basis point in one meeting, and especially in this meeting. There is several reasons to be a mistake, because the last meeting they could do that. We had economic data supporting that. The NFP, just like 2 days after the meeting, we had the NFP, and NFP was unemployment rate increased to 4.3%. So if 2 days earlier the Federal Reserve would cut the rates, we wouldn't see the fall that happened in last month in the stock markets. So they made the late mistake. They already made a late decision, but this late decision doesn't mean that they can do such big cuts right now, because this big cut can increase the warning in the market, can increase the panic, can cause the panic in the market. Now look at the data. Look at data with the GDP. They brought down the GDP progress from 2% estimate for this year, 2.1%. They brought it down to 2%, 1%, from 2.1% down to 2%. So they expect to see lower in economic growth. This is why they increased the unemployment rate expectation from 4%, which they had in the June meeting, to 4.4% for the end of 2024. That's really unacceptable. So just add it. For the next year, the unemployment rate, the expectation for unemployment rate is 4.4% again, up from 4.2% that they had in a dot plus in June. And for 2026, the unemployment rate is 4.3%, the expectation, which was 4.1%. So they are expecting to see lower economic growth and higher unemployment rates by end of this year, next year, and the year after that, while it was much better. They had much better expectation previous month. So it means that Federal Reserve members, they were mistaken in their expectations, and after September, not September, after July actually, after the July NFP report, which was 2 days after the Federal Reserve meeting. After that report, they were shocked at what happened in the labor market, which was clearly known that's going to happen. So they shocked what happened in the labor market and decided to be a panic, and they cut the rate by 50 basis points. That was the mistake. Because that mistake. So just look at the data. The data says that the economic growth will be weak. Labor market will be so weak. Economic growth weak, labor market will be so weak. Yeah, we have a so positive about the inflation. The inflation expected PC and core PC price index. They brought it down. They expected to see the PC price index at 2.3%. No, baby, that cannot be happen. With such a panic that you created, the PC price index down to 2.3% at the end of the year cannot be happen. Look at it, this data and market reaction. Let's check why I'm saying that can cause a panic in the market. Let's check the data. Let's check the charts. US dollar chart. That's the US dollar. Look, we had a 50 basis point rate cut, right? The 50 basis point rate cut normally it should put the pressure on the US dollar index down to 98, 90, at least 98, 99 after seeing the 150 before the meeting. But now what's that? That's exactly at the same level that we had a previous meeting before the meeting. So even we had a 50 basis point rate cut. That's not a joke. That's not a joke. We're talking about the U.S. economy. We're talking about the Federal Reserve. We're not talking about the South African the central bank to cut the rates by 50 basis point in a meeting, which is the normal, or 200 basis point in the Turkey, which is so normal to cut or increase. We are talking about Federal Reserve. That 50 basis point rate cut is shock. And after the shocks, look what happened for US dollar index. It's ignoring. Why? Because the panic in the stock market. Look at the stock market. When I'm talking about the panic in the stock market, I said exactly that. 50 basis point rate cut should cause a jump in the stock market to see the stock market in such a high levels. But what happened here? The stock market is reacting to something like nothing happens. It's like we had a positive news from the like something, I don't know, retail sales, for example. It's such, oh, we had a good retail sales. Let's see 0.2%, 0.6% increase in the stock market. Yeah, we had a NASDAQ, much better reaction, but still, that much better reaction is still crazy, stupid, funny reaction for the 50 basis point rate cut. That 50 basis point rate cut is supposed to make a jump into about 2% at least in the stock market. But why we see that slightly increase? Because market is panic and not is scared. What's happened if the Federal Reserve decided to cut their rates by 50 basis points? The economy is bad. The economy is going so terrible. Yes, that's what the 50 basis point rate cut telling us. So that panic that caused in the market this 50 basis point rate cut, that's such a big rate cut, which was not necessary to see from the Federal Reserve. This rate cut that caused this panic in the market, and that can pause, that can break, that can act as a break against increasing in the stock market. So we are not going to see. So what's it generally? Let's conclude the conversation here that with this, despite unlike expectations, we are not going to see any uptrend in the stock market. Yeah, that can be a little bit higher, but after 2 weeks, when we are having the meeting minutes, we will see there. You know, they're like unlike the previous meetings, there are not 100% of the Federal Reserve they voted for 50 basis point rate cut. There are the members that they voted for 25 basis rate cut. So later this month, we not later this month, and at the beginning of November, we will have probably today is 19. I don't know exactly in the next 2 weeks. Probably at the last days of this month or the first days of the next month, we will have the Federal Reserve meeting minutes. And there we will have the real panic in the market. There they will see the real panic in the market. That's why we're expecting to see not such a big movement in the stock market right now to uptrend. The stock market will go probably side movement or down by the end of the week and the beginning of the next week, as this panic means that we have a terrible condition in the economy, even if it's not. But that reaction, Federal Reserve reaction, means that. So the stock that's going to happen in the stock markets. So US dollar index full, but after last night's increase, it's full, but it's the same side movement. We will probably see some pressure on the US dollar index. Anyway, we had a 50 basis point rate cut. We cannot expect to uptrend in the US dollar index. On the other hand, in the gold market, that for out of anything, the gold market is getting so much benefit out of these reactions. Like US dollars under pressure, bond yields is under pressure. That will cause that more demand for gold. On the other hand, we have the panic in the stock markets. Again, safe haven, where are you? Gold. So that can again increase the demand for the gold. So the gold can increase again. That can what can happen later. And as for oil, energy market, a little bit positive reaction in the stock market can support the oil in one hand. On the other hand, we have a terrible condition in the Middle East. As you know, the conflict between the Hamas and Israel is increasing day after day, and most probably we will see the war between Israel and Lebanon in Hamas actually. Not all the country, the Hamas. That probably can cause another escalation in the market and put more demand and scare in the market, and which can bring the more demand for the oil and increase the oil price as well. So that's generally what happened in the market interaction. I hope it was useful for you. If you had any other question, don't hesitate to write in the comments. I will try to get back to you as soon as possible. Have a good day. Bye.